But I'm going to talk about trends in agriculture, something which I have 15 minutes to talk to you about also, for a subject that I could probably talk for about 15 hours. So if the screen suddenly goes black and you can no longer hear me, it means Caroline or Elizabeth have pulled the plug because I have overrun. So you're going to hear quite a lot in the way of similarity between what I've said, what Matthew has said, and what Michael after me will say, because there are a number of ever-present main drivers around these things, and those are Brexit, COVID, global issues, and then a number of ever-present ones in the agricultural economy, which are underlying and which inevitably in reality cause the problems, which are then magnified by the other issues. So starting with the big B, Brexit. Brexit was a defining moment, obviously in UK history, but more so in agriculture, because it really was probably turkeys voting for Christmas in a way, because it was well known that should Brexit actually happen, there would be a massive change to the subsidy regime. Or at least the current subsidy is a hangover from the Common Agricultural Policy in Europe, which basically paid farmers an amount of money, sometimes not even to do any farming, but it was a guaranteed income. And that guaranteed income was, at last look on the statistics from DEFRA, about 60 to 65% of the annual income from agriculture to agricultural businesses. Sorry, not agricultural income, annual profit. So that is direct subsidy from the government, effectively accounting for the majority, 2/3 of the profit that agricultural businesses generate in a year. There is going to be a massive change to that. The BPS, the basic payment scheme, is being phased out over the next 7 years. And so we're faced with the industry losing 2/3 of its profit. And when you have a business that loses 2/3, or an industry that loses 2/3 of its profit, it's hard to see how there won't be some casualties in that process. And those casualties could be, some of them might be quite big. But it goes to underline sort of the general unprofitability of farming, and that unprofitability is actually going to increase. We did have yesterday from DEFRA, we finally had some idea as to what the new funding regime is going to look like in terms of payment scales, and it is very much reduced. So at the moment, you've got farmers, sort of lowland farmers, arable farmers, getting around 150 to 200 pounds per hectare. That's going to drop to about 70. So that's a big drop, and there'll be an expectation of filling that in from other places. There's also been a massive loss of market access. And this might sound a little bit obvious. If we've left the EU, we no longer have access to the EU, and of course, EU, mainland Europe has has limited access to our market. But the loss of that market access was really key, because the whole EU was sort of 630 odd million consumers, and what the EU did was generate effectively a level playing field. There were some slight variations because of the way in which the basic payment was applied on a national level, but ultimately everybody was working to the same regulations. Everybody was working within a unified area, and thus the movement of goods was very easy, and you knew that if it cost you X to, say, produce a litre of milk in this country, it really wasn't going to be much less or much more than X in another country like Germany, Denmark, or France, and as a consequence, you were fairly certain that there wouldn't be movements of large amounts of commodities across national borders within the EU, which would then undermine local agriculture. Of course, that's changing now. We have no impact on the EU's methods of subsidisation for their farmers, and so there is a risk that this is going to have an impact on agricultural businesses as well. It's worth thinking at that point just about our national structure with our devolved assemblies in Northern Ireland, Wales and Scotland, but particularly Wales and Scotland, agriculture is a devolved matter. So Cardiff, Stormont and Holyrood can make their own rules, and they can, to a certain degree, deal with their own subsidies to the farmers. So they get a budget from Westminster and then they can spend it how they like. That does give rise, potentially, particularly through the Agriculture Act 2020 and how that operates, that does give rise to an interesting concept of there being unbalanced markets within the geographical confines of the UK. So you could find that a Welsh sheep farmer is subsidised to produce lamb, which is then sold at a lower price in England and which will undermine English production. Similarly with Scotland, and you can imagine, if something like a Scottish independence vote went ahead, that could have very, very considerable impacts in agriculture, particularly in the border regions. Now, Matthew was talking about labour access. That's been very acute in agriculture. There has been generally very little labour. We've seen, particularly in the horticulture sector, crops not being able to be picked. Now, that obviously has a big issue on the bottom line of a business. If it's been growing a crop and it can't pick it, it obviously can't make any money out of that crop. But it has then a massive knock-on with things like the HGV shortages and butchers shortages. There are pigs, countless pigs have had to be destroyed. So these are good, healthy pigs that could have gone into the food chain. They have been destroyed and they have been incinerated. And that is a major issue, which I'll talk a little bit more about the knock-on of that in a second. Then got two key pieces of legislation: the Agriculture Act 2020 and the Environment Act 2021. That changes the entire legal backdrop, as it were, to agriculture and our use of the environment. And certainly the Environment Act 2021, but is only just received royal assent. But both of those pieces of legislation need secondary legislation to bring various parts of them into force. And then around Brexit, there are obviously trade deals. Now, we've recently done trade deals with Australia and New Zealand. That's great. I've got some Australian friends who farm. I was talking to them about the trade deal with the UK and they went, so what? They're concentrating on places like Indonesia and China, because why wouldn't you, with, say, in China, was it 1.6, 1.7 billion people on your doorstep? You've got India on the other side. My friends are in Western Australia, so they've got close access to India with another 1.3 billion people. Indonesia, I forget, there's nearly 1 billion people there as well. So you've got nearly a third, nearly a half of the world's population on your back door. Why would you particularly bother with a country that has 65 to 70 million consumers in it, which is also halfway around the world? The big issue around the trade deals is not New Zealand and Australia, it is America and Canada, because they are going to be knocking on the door asking for trade deals in similar terms. They have very different production systems in those countries, and they effectively on our doorstep just across the Atlantic. So it's going to be very easy for those countries to import into the UK and import at a lower cost than we can produce it here. Now that gives an interesting issue, because of course when you think about climate change, they do not have as tight standards in America and Canada as we do in relation to environmental degradation. And so in effect, we may well be exporting environmental damage around our food production in the pursuit of lower food costs. COVID. Now, for the insolvency practitioners, if you end up looking at a farm business, there's going to be some interesting things about COVID, particularly from the start of the pandemic, when some milk processors just refused to take milk because they were mostly supplying the hospitality and leisure industry, and liquid milk sales into that area stopped overnight. There could similarly be some issues around the pig processing crisis that's been going on, in that if the contract was the farmer shall supply X units of whatever it is, litres of milk, finished pigs to a certain standard, etc. And the processors have just been turning around and saying, we don't want them, we're not collecting them, it's your problem, carry on. There could well be quite considerable claims against those businesses, which the farmers are reluctant to prosecute for a number of reasons. Just to give you some idea of a magnitude, I know of one dairy farm, their processor at the beginning of the pandemic stopped picking up their milk. Their milk check was about £50,000 a month, and that revenue went overnight for a period of 3 months. So it's £150,000 in revenue that had went overnight. So we're not necessarily talking small change. There's also some farms have taken out recovery loans, CBILS, and all the rest of it ill-advisedly. So there's going to be those knocking around. But probably more importantly with agriculture is the level of fraud around those, because the businesses aren't traceable, and whether I've heard anecdotally that there have been numbers of farm partnerships who have been contacted when they haven't started making payments on their CBILS, and the loan has been taken out fraudulently in their name. Then I have COVID continuing, staff shortages, changes in shopping habits caused by the pandemic. Sorry, I'm rattling through this because of lack of time. Global supply chain issues, we all know what those are like. I was, again, talking to friends in Australia. They were in the middle of harvest. They needed a part for their combine. They have a combine made by a company called Agco, which is the largest agricultural machinery manufacturer in the world. And there were none of the part they needed in Australia during harvest. And they have had to source a part from America and have it flown into Western Australia for them so they can keep harvesting. That's a real issue. Yeah, that's an idea about the supply chain issues that are going on, and that is continuing. So and that has a massive impact onto businesses. If you need a part for your farm machinery and it is not in this country and you do not know when it's going to come in, that might mean that you cannot harvest your crop when it is ripe and ready to do so. That's going to have an impact on your profitability. Costs of inputs and energy affect farms just as much as everybody else. We've seen the gas prices go through the roof recently, and that is the same for farmers. I did get some fertilizer costs. So last year, fertilizer was about £200 a tonne. This year, this is sort of December last year, December this year, it's about £400 a tonne and climbing. And most places are reliant on that. So if you've suddenly had one of your variable costs double overnight, literally overnight, it's not good news. Then we have the whole thing of climate change, and I could talk for 15 hours on climate change alone, how that's going to affect farming, but it is, and it's going to couple up with how the government is then going to deal with climate change, and what the government is going to say about what should we be using our land for? Should we be using our land for mitigation of climate change, or should we actually be producing food that is good quality, environmentally sustainably produced, and looking after our food security? So that climate change question is going to be massive, and there's going to be many agreements around carbon sequestration in fuel, forestry planting, all those sorts of things, again, which are going to be really hard to unpick in the event of an insolvency around a farming business or an estate. And then lastly, my last slide, 3 minutes to cover this, what I call ever present. So these are the things that never go away, seemingly have been there for years, which farmers are oblivious to, yet have loads of friends who have had scare stories about them, but then fail to do anything about it. So there's a normal three of death, debt, and divorce. People dying without wills, without knowing what their partnership agreement says, and people falling out. And they do, because of course you have a land asset in many farms which is worth sometimes normally about £2 million upwards, so it's worth having a fight about. Debt, i.e. they've taken on too much debt, and as I said earlier, they're losing a lot of their profitability in businesses through the loss of the basic payment scheme, and then divorce, sort of fairly obvious. So succession planning is a real key. I do a lot of that with clients, and you can see some businesses that they really need this in order to make themselves work, but they're very unwilling to pay anything for it. But it can lead to real issues for insolvency practitioners, because you can end up with 2 or 3 generations and siblings within those generations fighting one another, particularly if you're in and you're trying to deal with an insolvency situation. and they are at each other's throats because they're blaming each other for what's happened. You don't have the concept of business versus lifestyle, and many farmers are farmers because they don't know anything else. And many people get into farming because they have this idea of this bucolic loveliness of living in the country and, you know, tilling the soil and living off the land. There is often a lack of recognition that it is a business of its own right and it has to wash its face, and then, you know, that's where the problems really arise. So you get an issue that I don't know very many farmers who read their accounts when they come in from the accountant. Some just take the envelope, know it's the accounts, write which year accounts are and file it. That's quite scary. But what it also means is there's often not very much robustness around the accounts, which for an insolvency position can be quite hard to then pick apart. And you have accountants who do a lot on the accounts for tax purposes, which then fails to take account of the fact that the business is hemorrhaging cash because that's what the partners are taking too much out. Physical and mental health issues are a massive problem. It's a very remote and isolating industry. There are some people who do not leave, and certainly through COVID, I think about my mother on the farm at home. She's barely left the farm for sort of 2 years, really, because of COVID. And yeah, that is quite isolating. Luckily, you know, there is family around. There's my brother's family, but that, you know, if you're by yourself, yeah, that can be really hard. And physically, yeah, they then end up not wanting to leave the farm. So those health issues can, although they shouldn't impact, you've got to be aware of it, particularly on the mental side, because of course on farms as well, they've got the means to harm themselves. There are shotguns, there are firearms, there are chemicals, there are high places to commit suicide by hanging oneself, and it does happen, and it happens far too often. So, you know, always, if you're an IP going into these sorts of situations, watch out for the warning signs. And, you know, I'm always happy if people certainly if on here, if you're in there and you're worried about somebody, you know, and you don't know who to talk to, I'm always happy to provide sort of contact details for Farm Community Network and the other and RABI and the like, which can provide support to the farmer. Inflation, interest rates, well, you know all about those and the impacts those have. Lack of modernization, you know, it's a really interesting one. We're going through a huge revolution around data in farming at the moment, but farmers don't really know how to use data. They have all these gizmos on their tractors, which will tell them all sorts of things, and they have no idea what it's telling them and how it's telling them. And that's really wasted capital investment. So there is a need for, you know, farmers, actually, they need to stop really being farmers employed. You know, if they're on an arable farm, employ an agronomist or a specialist to help them with the farming bit. But they need data. They need to become a data scientist. They need to be able to understand what their fields are doing, what every blade of grass really on their dairy farm is telling them. And with the digital revolution, sensors and everything, that data is going to balloon, and that is then going to give rise to issues in itself. And then lastly, you got access to and affordability of funding. If your business doesn't make much profit, banks don't tend to lend to you, funnily enough. And when they do, and you stop making profit, they tend to want their money back. So that is one of those things that ever sits there and is not going to go away soon. So that's me done. Thank you very much for listening. As you probably gathered, I have cantered through that incredibly quickly. I'm happy to talk some questions, and if people would like to happy to have a coffee afterwards if people have got issues they want to pick my brain around. But it's a really dynamic industry at the moment, going through huge amounts of change, if for somebody going into an insolvency position or on a farming business, I would say, just make sure you get in there and do the research, as I'm sure you would do on it, but really be aware of those mental health issues of the people involved.